Hi, this is Michael Rony Mullick, and you're watching the pre-market show. And US markets, after it has fallen into technical recession because of two consecutive quarters of negative growth rate, the markets in the US are unexpectedly higher. And again, like I was talking about it last night, that this is a characteristic of a bull market where the markets will not react negatively to negative news. And that is exactly what is happening. And US markets again ended in the positive, and in the morning or after market hours rather, Apple and Amazon, both of them came out with their results, and the results were really good. So Nasdaq is up another 1.5 percentage because of these two tech giants' results, which coming in better than expectation. So again, IT stocks should be in focus. Definitely watch out for them. Yesterday, the IT index in India moved 2.8 percentage, and it is an important level of resistance, and we could very easily surpass that in today. And again, we are seeing the IT stocks are turning around and they are trying to move up. That is the condition of the market right now. SGX Nifty, let us look at it, and it is at unexpected levels of 17,138 right now. And if you look at the high of SGX Nifty, it is around 17,170. So markets are already factoring in a gap up of almost close to 200 points. So that is something absolutely amazing, because the way the markets have rallied, if you remember, just on Tuesday, the low market made was 15,450 and below, 16,450 and below, and now it is 17,150 and above. So that is almost 750 points rally from where the markets had closed in just a matter of 2.5 days. So this is a fantastic bull run happening in the market. So this is the SGX Nifty. You can see it's a one-way rally in the SGX Nifty. 17,148 is what it is currently trading at. So things look absolutely amazing. Coming to the US markets, if you look at the charts of the US markets, you will see that yesterday, like we were talking about in the post-market show, that after the GDP growth rate was announced in the negative, there was recession and the market started falling. But till 7:30, the fall came, but it was arrested, and immediate reversal came after that, and you can saw it very easily surpassing the day's high within the first 1 hour of trading, and then it moved up and consolidated towards the end, but ended in the positive. That is S&P 500 for you, 1.21 percentage up. Nasdaq, the same thing happened. Nasdaq is also very bullish right now, 0.92 percentage in the green. It is where it ended last night, and Dow Jones also at 1.03 percentage in the green. So overall, US markets are bullish, and in top of that, US futures are even more bullish because of the Apple Amazon results which came, and which I said was better than expectation. So Nasdaq is up another 1.3 percentage on top of 0.29 percentage yesterday. So again, very interesting to look at Nasdaq, and definitely that is why I told you in the beginning that IT stocks will be in focus today, definitely. And S&P 500 0.65 percentage up in the futures trade, and Dow futures is also up by 0.1 percentage. So things are looking absolutely bullish in overall markets. But if you look at the Asian markets, the Chinese and Hong Kong markets are not doing very well, because Hong Kong markets are down actually 1.57 percentage, and it is continuing to move down is what we are seeing. It has I think it should take support around this levels, 15 July, and then it can reverse from there. And Chinese markets are also down 0.8 percentage, but they were falling sharply. Now we are seeing some kind of recovery coming in the Chinese markets. So apart from Hong Kong and China, we see Japanese markets are green. They are 0.4 percentage up. You can see it opened with a huge gap up. There was some selling, but then there was recovery. So it's a V-shaped recovery happening in Japanese market. And Korean markets are 0.6 percentage trading in the green. It opened with a gap up. Now it is trading around those levels as well. So we can say that Hong Kong, China negative, Korea and Japan positive. So overall, it's a mixed results from the Asian markets is what we are seeing. So that is not having any negative effect on the SGX Nifty, because the US futures are positive and we are likely to open higher. So coming to crude oil prices, again, nothing has changed much. $96.96 per barrel crude oil. US VIX yesterday came down by close to 4%. So most of the major events are out. Most of the earnings of major companies are also out. So US VIX is likely to fall. India VIX yesterday fell around 6%. So overall, the volatility is coming down, and that is also a sign for the bull market. So whenever the US markets come, the volatility in the US market drops below 20, that is when we can expect markets to move higher uniformly. Talking about the dollar index, we see dollar index at 106.16. So it has weakened slightly. So that is definitely good for the markets. And also Indian rupee, you can see it is now, it consolidated on the top levels, but now it looks like a fall. So we are seeing continuous fall for 1 and 2 days, 2 rate candles. So hopefully this slowly comes down, and that will be definitely another boost for the Indian economy, which is already doing pretty well. Because apart from like recession and all those fears, there's no such fears in Indian markets. So 79.5 after many days after it broke 80 levels Indian rupee, now it is looking strong. It is down by 50 paisa. So that is definitely good. And for currencies, you definitely want them to come down slower or go up in a slow manner, because otherwise it disrupts the global trades. So good to see it is slowly coming down. Now coming to the levels of Nifty and Bank Nifty. Now what to say, it is already looking very bullish. Yesterday it broke 16,800 like it did not mean anything, although we know it was a very important level of resistance, but markets did not react at all. And as per technical analysis, we know 200-day moving average is the line below which we say markets are bearish and above which we say markets are bullish. So we had talked about Nifty's 200-day moving average, and the Nifty's 200-day moving average is right now at 17,025 levels, 25 to 30. So that is when the markets break above this level, we can expect the markets have gone technically bullish, and we can look for buying opportunities and not selling opportunities. So that is the plan for that was already the case for last many days, because if you're a trend follower, you're already on the trend, you're riding the trend on the upside. But from whenever this is crossed, I think this will be crossed very easily today. We're expecting a huge gap up, unless and until there is some heavy selling. Market should not break this level, because again 200-day moving average is a very strong support. So that is the markets. So we know Bank Nifty has already crossed that. If you look at Bank Nifty chart, we have discussed that it already has crossed this. The 36,400 levels was the 200-day moving average. It has comfortably crossed, and you can see the way the markets, whenever it was falling, the way it supported around these levels, and then it again moved up. So definitely 200-day moving average being crossed in Nifty is a very positive sign, because whenever the market corrects, it will be taking cushion around these levels and bouncing from there. So for Nifty, the level is very close, and we're expecting a huge gap up today of almost 200 points. So things will be interesting. So on the above, we can expect 17,220 levels to act as a resistance today, and on the downside, we can expect yesterday's low to be a very important support going forward. And also the 200-day moving average, the markets can take support around here as well. So these are the levels. Nifty looking bullish, Bank Nifty even looking more bullish. So the way, if the market opens 200 points gap up, Bank Nifty can easily open up around 400-500 points gap up. That can indicate Bank Nifty to open around 37,700-800 levels, and from there, if it rallies another 200-300 points, we can expect 38,000 to be touched today itself. But whether or not the markets will close above that level is definitely going to be interesting to see. And on the downside, yesterday's high definitely a support, and also yesterday's low will also act as a next level of support. So again, expecting the Bank Nifty to trade between 37,378 and 38,000 for today, and also everything is looking positive. IT sector, definitely you keep an eye out on those, especially Infosys, TCS. They are looking quite bullish. So IT sector has given a closing slightly above the important level of resistance that we had talked about multiple days. So now there is only a matter of time before it takes out the next high and it goes forward. So we are always trading with the trend. So right now this is looking bullish. So you can jump on this and take opportunity of the up move in the IT stocks unless there is some reversal signs in the horizon. Okay, so that was about the sectoral indices. We have talked about the important levels of Nifty. Now coming to some earnings. So we have the HDFC coming out with its results today during market hours, and it is a Nifty 50 stock, and it is also, HDFC is going to get merged with HDFC Bank in the coming days. So let us see how the stock reacts to its news. It was up 1.05% yesterday, and it is again at a very good zone. And I've already given a view to go long in this in the Telegram channel. So I hope you're riding the trend. So definitely this has a good upside potential. Hopefully after the news comes, it will rally. That is the expectation. Now let us see what happens. Coming to economic calendar, we have some data to be announced. It is mostly GDP related data. So we have GDP data of France coming in at 11 o'clock, of Germany coming in at 1:30, and then the European area GDP growth rate coming at 2:30 p.m. So expectations are all positive. So, but even in case of US, the expectation was positive. It came out negative. So you have to see what comes. But like I said, these are going to be absolutely non-event, because whenever a market like US, when it is falling into recession and markets not reacting at all, then you can imagine the European how much effect the European GDP growth rate will have on the markets. So, but it is nice to know, because it is always good to keep yourself updated with these economic indicators and what they are happening worldwide, what's the economic situation like. So that's why you can keep an eye out on this, and we will be obviously discussing this in the post market show. So until that time, have a very good day, and thank you for watching.